One of the most controversial decisions of the Federal Reserve under Jerome Powell's leadership was to raise interest rates 10 times in a row since April. This unprecedented move was aimed at preventing inflation from spiraling out of control as the economy recovered from the pandemic. However, it also had significant consequences for voters and lawyers across the country. For voters, higher interest rates meant higher costs of borrowing and lower disposable income. This affected their spending habits, saving plans, and investment choices. Some voters felt the Fed was too aggressive and risked pushing the economy into a recession. Others felt the Fed was doing the right thing and protecting the value of their money. For lawyers, higher interest rates meant more demand for their services in some areas and less in others. For example, lawyers who specialized in bankruptcy, foreclosure, and debt collection saw an increase in their caseloads as more people struggled to repay their loans. Lawyers who specialized in corporate, real estate, and tax law saw a decrease in their business as fewer deals were made and more disputes were settled out of court. The Fed's 10 straight rate hikes also had an impact on the legal profession itself. Higher interest rates made law school more expensive and less attractive for prospective students. They also made it harder for law graduates to pay off their student debt and start their own practices. As a result, some law schools faced lower enrollment and some law firms faced higher turnover. In this video, we will explore how Powell's hint on interest rate pause could affect voters and lawyers in more detail. We will look at the reasons behind the Fed's rate hikes, the reactions from different groups of voters and lawyers, and the potential implications for the future of the economy and the legal system. In this video, we are going to talk about how Powell's hint on interest rate pause could affect voters and lawyers. One of the key factors that influences this topic is the Fed's decision on its benchmark interest rate. The benchmark interest rate is the rate at which the Fed lends money to other banks and affects the cost of borrowing for consumers and businesses. The Fed has been raising its benchmark interest rate since 2015 to keep inflation under control and support economic growth. However, in a recent speech, Chair Jerome Powell indicated that the Fed will likely forego an increase in its benchmark interest rate when it meets in June for the first time since it began raising its key rate. This is a significant change in the Fed's stance and signals that the Fed is more concerned about the risks of slowing down the economy than the risks of overheating it. What does this mean for voters and lawyers? How will this affect their financial situation, their political preferences, and their legal challenges? We will explore these questions and more in this video. Stay tuned for more insights and analysis. The implications of the Fed's pause for voters and lawyers. The Federal Reserve's decision to pause its interest rate hikes has significant implications for voters and lawyers, as it affects various aspects of the economy and the legal profession. One of the main effects of the Fed's pause is that it could boost consumer spending, which accounts for about 70% of the U.S. economic activity. By keeping interest rates low, the Fed makes borrowing cheaper and encourages people to spend more on goods and services. This could stimulate economic growth and create more jobs, which could benefit voters who are looking for a strong recovery from the pandemic-induced recession. Another effect of the Fed's pause is that it could ease inflationary pressures, which have been rising in recent months due to supply chain disruptions, labor shortages, and higher energy costs. Inflation erodes the purchasing power of consumers and reduces their real income. By holding off on raising interest rates, the Fed signals that it expects inflation to moderate in the near future, as some of the transitory factors fade away. This could reassure voters who are worried about the rising cost of living and their ability to afford basic necessities. A third effect of the Fed's pause is that it could lower mortgage rates, which are closely tied to the Fed's benchmark rate. Mortgage rates have been rising since last year, as the Fed started to tighten its monetary policy to combat inflation. Higher mortgage rates make it more expensive to buy or refinance a home, which could discourage potential buyers and homeowners. By pausing its rate hikes, the Fed could help keep mortgage rates low and support the housing market, which is a key driver of economic growth and wealth creation. This could benefit voters who are looking to purchase or refinance their homes, as well as lawyers who specialize in real estate transactions. A fourth effect of the Fed's pause is that it could reduce debt payments for consumers and businesses who have accumulated record levels of debt during the pandemic. Higher interest rates increase the cost of servicing debt and make it harder to pay off loans. By keeping interest rates low, the Fed reduces the burden of debt payments and gives borrowers more breathing room to manage their finances. This could benefit voters who are struggling with debt, as well as lawyers who deal with bankruptcy, debt settlement, or debt collection cases. A fifth effect of the Fed's pause is that it could affect business loans, which are also influenced by the Fed's benchmark rate. Business loans are essential for entrepreneurs and small businesses who need capital to start or expand their operations. Higher interest rates make business loans more expensive and less accessible, which could hamper innovation and job creation. By pausing its rate hikes, the Fed could help lower business loan rates and encourage more lending and borrowing in the private sector. This could benefit voters who are interested in entrepreneurship or work for small businesses, as well as lawyers who advise or represent business clients. A sixth effect of the Fed's pause is that it could impact legal fees, which are often determined by market forces and demand for legal services. Legal fees vary depending on the type, complexity, and duration of a case, as well as the reputation and experience of a lawyer. Higher interest rates could increase the cost of running a law firm or a solo practice, which could lead to higher legal fees for clients. By pausing its rate hikes, the Fed could help keep legal fees stable or lower them slightly, depending on how competitive the legal market is. This could benefit voters who need legal assistance or representation, as well as lawyers who want to attract or retain clients. In conclusion, the Fed's pause on interest rate hikes has important implications for voters and lawyers, as it affects consumer spending, economic growth, inflation, mortgage rates, debt payments, business loans, and legal fees. The Fed's pause could have positive or negative effects depending on how each factor affects a particular voter or lawyer. Therefore, it is important for voters and lawyers to stay informed about the Fed's monetary policy decisions and how they affect their personal and professional lives.